What's going on? Johnny here, and in today's video we are going to recap two of the trades that I made today. I do have one more position open that I am swing trading overnight, so let's get into it. I'm going to start sharing my screen with you guys here, and I hope you guys can hear me okay, see me okay. Usually we go live every morning at market open, Monday through Friday, but I will not be going live tomorrow morning as I will be out of town on a day trip. So with that said, guys, giving a recap of the live stream we had this morning, August 8th. And basically, I just wanted to talk a little bit about my thought process behind why I took a trade in Mara as well as Ocgn. Now, real quick, just to show you profits, Ocgn, I was up about $13. And yes, I know that is not a lot, but the position size itself was a little bit more than 4% profit. And Mara, I was up, or am up, locked in $15 here on a small trade that took place, leaving a lot of profit on the table. But overall, it was a nice 4 to 5% profit on my position that I took. Overall, they're up 10% today on Mara. So let's talk about it a little bit. Now, this has been trading in a downtrend, obviously, but now Mara is trying to find consolidation. It did find some consolidation and support down at 1350. And if you want to learn more about exactly what support level and resistance levels are, you can definitely check out our Learn to Earn lesson library, which is available for free. It is a playlist here on YouTube, and you can watch the videos talking exactly or watch the videos of me talking exactly about our 4 key focuses. 1, always making sure direction is in your favor. 2, understanding previous patterns and how they can correlate with future patterns. 3, making sure you understand key levels like support and resistance. And 4, opportunity cost must be in your favor. So opportunity today for profits over the last week or so is 31% from those lows of $13. Now, we have traded this in the lows of $13 and $14. We've traded this company as high as $35. But the main point of all this is to show you that now it is trading within this channel. So it actually sold off. Now it got a low of $13.50. Bounced back up to where the 45-day exponential moving average is. Now it's still below this resistance line of 1766, right? And I could actually put this a little bit higher now. There we go. 1791 was a really strong resistance level. It tested it quite a few times on August 6th as well as August 7th. And now it actually broke through this 1790 level today after hours, August 8th. Okay, now I am recording this a couple of hours after the market already closed. We are in aftermarket session right now. So it can do 2 things. Now Mara can continue to rise and go up to previous highs where we once were. Even at the $27 level is much higher. But I was trading this company even at the $34 level and the $35 level. Whoops. We're going to undo that. Undo. So we have been trading this company for quite some time. Oh, there we go. And we even traded it at the $27 level, making over, I think now, close to $1,000. Last time I checked, it was over 500. That was a couple of weeks ago. Now we're well over $1,000 in profit on Mara, this one company alone, in a downward trend. So it's going to be nice to see how much money we can make in an upward trend. So on the 4-hour chart, it's showing some nice green candles throughout the day. A little bit of weakness right here, but then pushed up. Now we want to test this 45-day moving average. We're going to see what happens as it is testing it on the 4-hour. Now, as far as the 30-minute, it is above the 45-day moving average. It just moved above the green 200-day moving average. And if this can actually start going up higher, it'll create even higher highs throughout the week. Now tomorrow is Friday, so you may or may not want to hold this over the weekend, as it can drop back down to those $13 levels and potentially $15, $16 levels. Either way, I noticed all this happening this morning and I wanted to take a trade on it because it was reaching these low support levels of 15.90. I thought it'd be a good opportunity to buy in. I woke up early this morning thinking I was going to actually get in at a very nice level here down in this area, and it already popped up to 1640 and it was trading within like 16 and 1620 range by the time I actually woke up and started looking at the charts. Would have been nice to get into that $15.80 area, $15.70 area. As you can see here, I even sold 50 shares at 16.15. So just knowing that, if I would have just held, we would have been in a better position today, and actually probably would have locked in more like $100 today instead of only locking in $15. Now what I should have did, or what I did do, let's start there first. What I did do is I noticed that this was starting to go up and I wanted to catch a little bit of some skin in the game. So I got 10 shares at 16.53. It was like 160 bucks. Got another 10 shares around 163 bucks. So now I'm in about $300. What did I do next? I held the money all the way up until it reached this first red candle. Now I did see these three red candles pull back. It bounced off of the 45-day moving average and pushed up. Now then it got rejected again, pushed up again, and on this final candle here, I actually sold out, selling 10 right away at 17.11 and locking in profits. I was then going to wait and let this ride up even more, and I actually was messing with a trailing stop loss. As this goes higher, it will actually come back down, and that's exactly what this did on this candle. I had a 10 cent trailing stop. So this was a 14-cent move candle. It went up, it came down, and I ended up getting stopped out on this red candle right here. It went all the way up to 17.39. I ended up getting stopped out at 17.25. So it went up as high as 17.35 at the time. 17.35 when I created the stop, came down to 17.25, got stopped out. Unfortunately, I probably would have ended up getting stopped out at any of these points down here, as it went from 17.42 to lows of 16.95, which is more like a 50 cent spread. So next time I just need to make a bigger spread or not have a trailing stop on this. Now it was above the 45-day moving average. It never once dropped below that blue line, indicating upward momentum. Even after hours, it tested it again, resulting in a rejection to where it did find support and started moving up. It is now up $18. It is up to $18. It went up 9.5% from lows of 16.11 to highs of 18. That is a $2 move. A $2 move. So for every 100 shares you owned, you would make $200. Or at 10%, if you would have put in $2,000, you would have made 200 bucks. However you want to look at it. Okay, so with that said, what's going to happen for tomorrow? Well, we are starting to see some rejection right now at the time of this video at $18. It's actually starting to get rejected. So if it can't stay above this resistance line, which is technically now a support, if it can't hold this resistance level and it retests, then it will continue to sell off. If it retests this, then you could easily see this break above and make newer highs, as you know, obviously it could easily start its upward momentum. Now for the 3 stages of reversal, you have the sell-off period or the rejection period, consolidation period, and then we have an area of confirmation, which is where we want to be. We want to be able to ride this wave up as it goes above this trend line, whether it takes a day, a week, a month. We want to make sure that we invest in companies that are going up. With that said, it is starting to show signs of progress on the 45-day moving average, but it needs to pass that green 200-day moving average in order to actually see some really strong progress. Or else this is just going to sell off again. We're going to get into a better position like we did down here, maybe buy on that EMA line down in the $17 mark, or even the $16 mark, and we'll be in a better position for when this does rally and go back up again. Now remember, that can go down and then it could bounce back up, right? But there's no way to really know until tomorrow. So I'm very excited to see what happens. This either breaks out today, like breaks out tonight after hours, or it'll pull back and potentially break out. So we'll see what happens in the morning. But that is my trade recap. Should have held a lot longer. Even with only $300, a 10% move would have been 30 bucks instead of 15. So I would have doubled my money. Moving on to Ocgn. Now, Ocgn is one of those companies that we've been watching on the channel as well. It does have this really cool, pattern, and that's what we like to talk about here. Direction must be in your favor, so you want to buy down here where it's at the support level, and you want to ride this up in your direction and sell at the resistance levels. Now, with that said, here, all four key focuses go into this trade, and I'm just going to explain it here in case you haven't watched the Learn Lesson Library videos yet. Very simple, okay? Very simple. Direction must be in your favor, okay? So it must have a continuous uptrend. We must understand previous patterns. Obviously, this has been a very strong pattern that keeps repeating itself over and over and over for this time period, okay? It's also trading within this channel. So that is our patterns. And then number 3 is key levels. Key support levels, obviously right here at about $1.11 to $1.20. That's a nice strong level, an area of opportunity to buy. That is where you would want to buy, okay, from past patterns and past performance. Now your resistance levels up here, we have one key resistance, which is right here. It always seems to kind of bounce and break right in this area and consolidate a little longer than we want to. But overall, if we took this line away and you'd have these key areas here, this is where you'd want to sell, okay? You'd want to sell in the red. So you're going to buy down here, you're going to wait, you're going to sell up here, you're going to rinse and repeat. Buy, sell, buy, sell, buy, sell. And you want to know what these moves are? You might think, oh, what's $1? Well, $1 is 87% right there. Right here, this move was 74% in 2 weeks. This move here was 87% in 22 days. This one right here was 87% in 5 days. Okay, so this moves very, very fast and very aggressively, either up or down, right? And then for opportunity cost, right? That's what we're talking about now. So by understanding just those 4 key focuses, you can then decide whether you want to take a trade. Is the direction in my favor? Do I understand the patterns? Can the patterns repeat themselves? Yes, most of the time, but not always, but patterns. And key levels. Is this a good opportunity to buy? Am I buying at support? Or am I trying to buy way up here at resistance? Is my probability higher that it's going to go down due to past performance, or is my probability more in favor of it selling off or going up, right? Just depending on where this is at the current time period. Now, if it's in the middle, if you're trying to get into a company and it's right here and it's barely going up, then you can still catch some profits there, right? Knowing what direction the company is going overall. You don't want to buy here and say, hey, I'm going to make money on the next cycle when I buy here, but it has to come down here first and then go all the way back up, passing where I bought. You don't want to have to do that either. You want to wait for it to sell off, get into those buy range areas, and that's when you load up. It also reduces your risk. So when you buy at these levels, if it goes down past your support area, you can get out very easily. You can just sell out. Okay, well, that didn't work. I'm going to sell off. This pattern line is broken, and it's going to form new patterns in the future. Okay, you have less risk. But if you buy midway, you buy up here thinking, oh, this is a good point, it's going to go up, and it ends up going down even past where your buy point is. mean, you're down 30-40% very easily. So to get into my recap for this trade, we made $13. It was about 5%. Understanding that this was coming down and actually going up, I've traded it the last couple of days. First trade I took was on the 1st of August. I took another trade on the 5th of August. And then I took another one on the 7th of August. Another one on the 8th, which was today. So the one for the 8th, I really noticed this big sell-off here. It actually got into that buy range area and actually sold 200 shares at $1.22. And I think it took like a $10 loss on it, something like that. I just knew if I got out of that position in the night, then I could actually buy in at a better entry point during the day. So I sold at 122, and then the very next morning, which was today, I was able to buy in at 118, 120, and sell at 124 and 127. Now, I thought this was going to go up a little bit more, but obviously it didn't go up as much as I would have liked it to. Still, though, moving from 118 to 127 was almost 10 cents, almost a 10-cent move. And, you know, when you have a couple $100, it's very easy that you can make a few bucks. So this was selling off. I noticed that it bounced off of this 45-day moving average. Again, this can act as a resistance when it's below, right? But it can also act as a support when it's above, right? And when something's above, then we can clearly see that direction is in our favor if we're going long, and you can buy down here when it bounces off of that EMA, right all the way up until you start seeing signs of rejection. Either sell at the top, make 43%, or if you had to sell here at the bottom, realizing, hey, it actually is selling off, then you're still up 30%. But the point is, you bought down here, you didn't buy too high up there. And by understanding this too, I could hold longer, right? Selling here was a good idea, right? I brought my average down. I think my average was like 120, 130. It looks like my average is like at 130. So it hasn't even made, it didn't even go up back to where my average was for the previous day. So sometimes it's nice to just sell out, get out, you know, take the little loss, and then that way you can reposition yourself to get these small little windows, right? I could have waited all day for it to get up to 130, still been down, and never broke any actual profits. So being down 10 bucks yesterday and being up 13 today on this company, I'm actually positive, you know, $3. It's not a lot, guys, but come on, it's a small account. This is all for educational purposes anyways. So now I bought at 118, 100 shares at, and then I bought at 120 at 100 shares. I did that first. So I bought at 9.35. 30 minutes later, I bought an average down by 2 cents. And then I sold at 10.14 and 11.30. I split it up. So I had 2 entries, 30 minutes apart. And then I had 2 exits a little bit over an hour apart. One was sold at 124, locking in profits as it went up. And one was sold at 127. And I could showcase that to you right here. So I bought here thinking it was going to bounce off of the 119. It sold off a little bit. So I was like, you know what? I'm going to buy down at 118. I wanted to buy 117. Got filled at 118 right here. Now this says I sold on this candle, okay? Specifically this candle. It doesn't mean I sold down here. I really wish it would like pinpoint where the sell mark is. But as you can see, this was at 1.243, which was 1.243 was way up here on the candle, way up here on the EMA line. So I sold it up here, buying it way down here. Now why? Because I knew that this went all the way up and it started getting rejected below the EMA. It was coming to a close on the 5-minute candle. It was coming to a close, and I thought, okay, well, it's selling off. If it closes below, it may stay below and start to sell off even more. Now it didn't do that, so I just sold half, right, locking in profits from down here to up here. It consolidated a little bit below this 45-day moving average and then pushed up. Now we're testing the 200-day moving average, the green line. Okay, so I actually sold at resistance. I waited a couple levels. I waited 1, 2, 3, 4, 5-minute candles. So I waited 20 minutes. And then on that 25th minute, I decided, you know what? It's not going to break this. It's not making any new highs. If anything, it's actually going to go down like it did. And I sold another additional 100 shares at 127. So very well played out for me, being able to sell at the resistance here. First indication of where I should take profits, and then pushing up, selling here at a second indication to take profits. Now, if this would have came down and started crashing, then I would have sold the other 100 shares in this area, because my direction's changing and it could have came all the way back down to these previous levels. So that's what I was waiting for. If this green candle would not have pushed up and made newer highs, then more than likely I would have been selling, because this would have made lower lows. And with that said, it consolidated a little bit on that 45-day moving average again, tested this level one more time, and then broke past it, resulting in another nice little move of almost 5% from 124 to 130. And since then, it's just kind of been trading sideways now through the end of this session. It's at 129 after hours. Now, what do I think? I think it could probably come down a little bit more, probably get back down to this buy area level between 117 and 122 area, might be an area to buy in again. But because it's staying below this 200-day moving average, I don't really want to buy until it actually confirms that it's going above it. And I could showcase that to you right here. The last time it had a huge sell-off, it took a minute for it to get above. It took almost 2 or 3 days to get above the 200-day moving average. As soon as it crossed over, it was fair game, and it just continued to rise all the way up to that resistance level of $1.97, and then got rejected. We've been in that rejection period ever since. So now we're starting to see this EMA line get really, really close, indicating that this can either reverse and go higher and be in our favor now, or it can potentially start kind of selling off again. It can just keep consolidating and just going in between these levels. And then maybe on the next one we'll get another bounce. So a few different ways that this can actually play out tomorrow. We're gonna wait and see exactly what it does. I think I'm gonna do this one peach and this one like purple or something. Yeah, right. I'll just do that for now. I don't know if you guys can see that color. So if it breaks above this line or if it breaks below this line, right? But the overall direction is going to be in our favor. We want it to go up. And that's what I'm thinking. And that's my recap on these two companies. As far as the markets today, markets did really well. They did push up very nicely today. And now they're hitting this SMA line. So we're still in a bear market. It's still going down. Everything's going down. But at the same time, we're still able to get rejected from that 200-day moving average. So by tomorrow, this thing could sell off again. We had a huge sell-off here at 408 to 395, push back up to 406, but it's still creating a downward trend. So right now, this green trend line is still kind of staggering down like this. We're actually going to make it kind of green to, well, that's not really green, is it? Where's my green at? That's weird. I'll just do that one, I guess. So we're going to really see what happens with this line as tomorrow plays out, and after pre-market. It can just continue to sell off, which means for us, it would actually come down back to previous levels, maybe 394, something like that. So yeah, we're going to see what happens tomorrow. Anyways, thanks guys. I hope you enjoyed this recap video. I appreciate your time. And like always, remember, let's end the year on a green note. And we'll see you in the next video.